All right, welcome back, everyone. And today we're gonna go through some 2025 housing projection by two credible sources out there. We're gonna dive deeper into their methodology and then go share. Julie and I will share our experience as to whether we agree or disagree about their housing forecast.
Okay, sounds good.
All right, Julie, you ready?
Ready.
All right. So the headline is Zillow and Fannie Mae diverge on 2025 housing market predictions. Okay, here we go. Dramatic mortgage rate movements are destined to play a major role in the coming year, according to Zillow's newest forecast, which also calls for declining mortgage rate to be a catalyst for home sales growth and home price appreciation in 2025. Furthermore, there's a strong case of deja vu on tap for 2025. What does that mean, deja vu?
Looks like they're coming around again.
So we are expecting a mortgage rate to get better gradually, and opportunities for buyers should follow. But be prepared for plenty of bumps on that path, says Zillow chief economist Skylar Olson said in a statement. All right. So furthermore, this past September's dip in mortgage rate provided a tailwind to home sales in the second half of the year. Zillow says that 2024 will finish with 4.06 million sales, a number that Zillow expects rise slightly to 4.16 million in 2025. Prior to the pandemic, 2019 and before, a typical number of sales in any given calendar year is way more than 4 million sales. It's like
Wow.
6 million.
Okay.
So this past 3 years of the pandemic and post-pandemic period that we're experiencing very low total sales
Right.
at mere 4 million. Think about it, Julie. Do you know there are 360 million people in the US?
Okay. I didn't know that.
There are 140 million home owners in the US. And yet, the projection for 2025, there will be a little bit over 4 million sales.
Yeah. Wow.
What disparities in number tells you? Share with me your thoughts.
I'm not sure how to read that. What are your thoughts on that? I'm not sure how to interpret that information.
The ratio is very extreme.
Right.
140 current homeowners, and yet the projection for sales in 2025 is 4 million. That tells me
Mm.
still insufficient homes for sales at 4 million.
Got it.
We expect the demand to be a lot higher than 4 million.
That would make sense. Wow.
Now, let's continue.
Interesting.
Yes, it is. Furthermore, home values are forecast to tick up 2.2% in 2025, in line with the 2.2 to 3% annual appreciation, according to Zillow. A lot of resources, lot of housing economists predict home prices will increase in 2025 and even 2026. How cool is that?
That is good. Yeah, that's great. They were an owner.
Yeah, it is good because if you own a house or property, given the projection that the appreciation will increase 2.2%, pretty much in line with inflation, you're making money year over year only if you are a owner or an investor that have a property, right?
Correct.
At the same time, you're not going to be rich on any real estate you do not own, right? So the people continue waiting
Good point.
on the sideline or miss out on the appreciation of
That's right.
at they purchase. In terms of rental property, in which something you and I do, you stick on the sideline and not participate in a rental property ownership. Those investors stay on the sidelines, they're going to miss on multiple aspects of owning a rental property. They're missing the rental appreciation, they're missing the cash flow, passive
Right.
and collect, missing on the tax benefits of owning a rental property. They are missing
Exactly.
the loan amortization, loan debt payoff by the renter that are
Mhm.
renting their homes.
That's a really good point. So it's
Yeah.
good to own something right now.
Yeah. For primary homeowner, you're not going to get as much economic benefits owning an income property in which
Mhm.
yes, but if you own your primary home long term, the
Yes.
mortgage you're paying will pay down your primary home mortgage, and
Mhm.
long term equity growth appreciation of your primary home is one of the greatest asset wealth builder in
Right.
lifetime. Am I right?
That makes sense. Yeah, that doesn't make a lot of sense.
Zillow says the flow of new listings to the market is still nearly 14% lower than it was before COVID-19 pandemic. Sell inventory is now about 26 below the norms of 2018, 2019.
Mhm. Mhm.
So the inventory level, although increased year over year, the amount of inventory nationwide,
Right.
still around 26% below the pre-pandemic
Normal.
year, 2019 and before.
Interesting.
Inventory in the market in the past year, and yet still the demand was greater than the supply of limited inventory nationwide.
Okay. Okay. That's good for homeowners.
Fannie Mae, on the other hand, there's a low level of affordability and ongoing lock-in effect expected to keep activity muted.
Mm.
Tells me there was the mortgage rate, if it's staying at 6 to 6.5% for 2025, based on
Right.
experts' projection, the home sellers are not selling because so many mortgage holders are locked in at a historical low mortgage rate.
Mhm.
They're not going to give up 3 to 4% of a mortgage rate.
Exactly. And go where?
And
Do what with it? Yeah.
yeah, to trade up to 6.5 to 6
Right.
mortgage rate and doubling and tripling the mortgage payment. What?
Who would do that? Nobody would do that.
As a result, the lock-in effect will be a prolonged situation unless the mortgage rate comes down to 5%, which is not
Not
realistic.
going to happen.
Okay.
Mhm.
All right. So, uh, furthermore, Fannie Mae says from an affordability perspective, we think 2025 will look like a lot like 2024.
Mm.
Mortgage rates above 6%, home price growth easing from recent highs but staying positive, and supply remaining below pre-pandemic levels.
Interesting.
Okay.
Mhm.
Furthermore, Fannie Mae expect mortgage rates to remain elevated, at least
Mhm.
6 to 6.5%, and
Right.
hindering the activity. That means it'll continue to cause a very lower than expected housing transaction for the foreseeable
Right.
future. And furthermore, Fannie Mae's Economic and Strategic Research (ESR)
Mhm.
December called for existing home sales to move only slightly higher.
Okay.
The broader economy will remain stable and expand at an above trend pace through 2026 as it navigates elevated core inflationary pressure and heightened policy uncertainty. But here's the main takeaway from Fannie Mae's economists, the prediction they have for the housing market in 2025. They expect average mortgage rates will decline modestly,
Mhm.
being above 6%.
Right.
Okay.
Uh-huh.
Existing home sales will remain near 30-year low, but location matters.
Okay. Yes.
Home sales are not new construction. It's home sale from existing potential sellers.
Right. Uh-huh.
Because the mortgage rate is expected to be 6 and 6.5%, those potential sellers going to stick on their mortgage.
Exactly.
It'll be existing home sale will continue to be low for this coming year, 2025. But then it all depends on what locations that tells me each local market is different. Okay.
Mhm. Mhm.
So it's all about the localized is real estate, the housing market is hyper local. Each specific neighborhood,
Uh-huh.
each specific zip code have their own unique dynamics within
Mhm.
that market. Am I right?
Absolutely.
New home sales will remain a bright spot in the housing market. in places that they can be built more easily. New houses. What about new construction? New construction, as Julie, you and I discussed many times throughout these videos, we're seeing a lot of new construction homes for our investors, right?
Right.
In the growth markets in the Sunbelt, South and Southeast, mainly Oklahoma, Alabama, right?
Yes.
So the builders, new builders, they're building more new homes in those growth markets in South and Southeast because those locations are easier to build, easier in those markets in the Sun Belt, or easier to obtain permit, easier to get the land, factor in the tremendous population growth and job growth in those Sun Belt, South and Southeastern areas. So where those
And then aren't your new home builders offering incentives on the mortgages? So I think that's a real plus for those types of markets as well.
absolutely, that's our business model, right?
Right.
Buying those affordable new construction homes in growth markets, in emerging markets, entry-level homes, and you can have a good rental market in those markets, and you can cash flow with a 25% down payment. And those local cities, they allow more new homes to be built to accommodate the fast growth in those South and Southeast markets. Low entry-level homes, which is the great model. National home price growth will decelerate. It tells me that national home price growth will not skyrocket compared to
Right.
the year 2021 and the year 2022 when there were double and triple digit
Right.
as a result of the historical low interest rate during the pandemic. We have to be more realistic, and home prices grow at a very mild rate.
I think it's interesting. Decelerate as opposed to decline. Some people might read that and think, oh, it's going to go down. No, it's not going to go up as fast, but the value, they are still going to go up.
Doomers think it means housing crash. Decelerate means slower growth, not skyrocketing acceleration.
Right.
Modest single-digit appreciation will decelerate. And the fifth prediction by Fannie Mae is that the last one is multifamily housing will remain in a holding pattern. The information tells me multifamily rentals in many markets, especially in the urban core, overbuilt in many of those markets, and they are slowing down because there are more supply of multifamily rental homes than there are demand. So
Right.
being in a holding pattern means the next few years, the multifamily developers, they are not building any more units until the demand catch up with the abundance of supply of those multi-unit apartment buildings.
Makes sense?
My takeaway, Julie, is that from Zillow and Fannie Mae is that, things will similar. 2025 will appear to be similar to 2024. We have a still limited inventory, still higher demand, still not that many home sales because of the lock-in effect. As long as the mortgage rate is around 6.5%. Well, my takeaway is going to be another normal, healthy market for 2025. If the mortgage rate goes below 6%, there will be much more demand. There will create a floodgate of people out there that can qualify to buy homes based on lower than 6% rate, and that will create pandemonium in housing.
Well, that does make sense based on the statistics you're showing. It looks like things are going to remain relatively the same with slight increase. So I think those people are hoping that if the rates drop below 6 or get to 5, then I'll make my move. That's the wrong strategy to take. I think it's to really look at the situation. 2025 is not going to be a lot different than 2024. But if you are thinking about getting into the market, it's time to get off the sidelines.
Yep. If you're ready to buy, whether you're a homeowner, whether you are an investor, it doesn't matter. Pull the trigger. You need to own real estate. I mean,
absolutely. 100%.
Not going to make money through real estate wealth you do not own.
That's true.
Got to take action and own a piece of property.
Real good.
Okay. With that said, Julie, as we conclude this video, if you receive any value whatsoever, please like and subscribe to my YouTube channel. Also, make any kind of comments you wish about our presentation. What's happening in your corner of the market? Are you seeing growth? Are you seeing a downturn in your market? share your thoughts in your local market. I know every market is different. And
Right.
what action plan? Are you planning to buy a primary home or investment home? If so, where and why? I can answer your comments. And finally, if you have not already done so, you can put your email at the bottom of our YouTube description.
Uh-huh.
You can become a free member of our real estate investment network community. So every morning you will receive great education, free information about real estate investment opportunity that can affect your financial future if you take action to become a real estate investor. We conclude this week. We will come to discuss more information about all aspects of housing, investing. All right, Julie?
Stay tuned. Sounds like it's going to be good next year.
Yep, that's right. Looking forward to it. Absolutely agree. Have a nice day, everyone. See you next week.